everyone, and welcome back to another week of Nexus Grain Market Updates. It is Tuesday morning, 31st of March, 10 a.m. Let's get to the markets. Old crop corn right now is down 2 pennies at $4.12 a bushel. Across my various terminals at Nexus, new crop corn is $4.41 across the very same terminals. That is down 3 pennies. Soybeans are steady, $10.69 for old crop soybeans across the same terminal markets. And new crop soybeans range from $10.69 to $10.74 depending on the elevator, and that price is steady from yesterday. When I step back and look at the prices I just gave you, again, I like to do a little bit of a recap. Essentially, over the last 2 weeks and last 4 weeks, look at those 2 periods, corn is essentially steady. Soybean market varies considerably. We're up about 10 cents from 2 weeks ago, and we are down about 20 cents from a month ago for old crop soybeans. New crop soybeans, right now we are up about a nickel for both 2 weeks ago and a month ago. So that's how things are shaping up there. I like to do index studies when I look at pricing, and particularly price ratios and how things have changed over time. So a little bit of information I want to share with the group. When I go back to the first of the year, January 1, I did a study last night. I compared corn to soybeans in the price relationship that's occurred between those 2 commodities, and the meal and oil in a bushel of soybeans. Because really that's what a bushel of soybeans is a certain amount of meal, certain amount of oil. Corn market since the first of the year is up 9.5%. Just percentage-wise. Soybean market is up 14.5%. The resulting components of a bushel of soybeans, soybean meal is up 15%. So all those percentages are so far holding up in line. Obviously, soy is leading corn somewhat. Price of soybean oil is up 36%. So, obviously, as I've been saying all along, soybean oil has really been driving the show. Last night, the percentage of value of soybean oil in a bushel of beans is about 52%. The last time we were anywhere close to that was July of 25 at 51.75. Took a pretty good dip in between that, but those ratios do ebb and flow considerably. Another thing that I do want to share with the group, again, getting back to soy, board crush margins. Since the 1st of January, they're up about 92%. Again, this is all driven by the petroleum market. Obviously, the component value of petroleum equivalent in a bushel of soybeans is well over half of a bushel of soybeans. Corn, it's maybe about a third. Okay, that's the difference. That's why you're seeing a little stronger soy market than you are corn. As far as the S&Ds, something else I want to touch on, and I touched on this last week, and this is important to know. I just want to look at yesterday's export inspections report. Again, same thing I've been telling everybody now for weeks on end. Right now, we are squarely in our in the last half of the export season. We're leading. We're ahead of pace for export inspections by about 9% for corn, above pace, and we're behind pace by about 12% for soybeans, and that's to meet the last WASDE export inspections number. Okay, I'll remind you again: corn 3.3 billion bushels of corn to be exported, soybeans 1.575 billion bushels of soybeans. Okay. The export season, as it marches along, we're going to see some changes. And the reason I say that is when I go back to the actual sales report, and you've heard me say this before, the inspections report is what's been packaged up and left. That has to be reported. The other report that is a mandatory report is the actual sales. Obviously, some of these sales get canceled, don't get shipped. As things are occurring right now, I'm not seeing an enormous amount of cancellations. And what's curious about our sales report, and I went back to last week to find this again, our corn number is right in line. We're about 1% ahead of sales pace to hit that 3.3 billion bushel number. What's on the books right now at the current sales pace is 3.317. So just right on the money. Soybeans are also very close. We're penciling in a 1,575,000 soybeans to be exported out of the country. At the current sales pace, we're at a 1.5 billion. So that takes a 350 carry out to a 425. That's a real number. That's not a real, what I would consider a real strong market mover. So we're going to see how this plays out, but that's how the numbers are dropping in right now. And our export season, we have 22 weeks remaining in our export season. The report today that we're all waiting on, that comes out in a little less than an hour, 11 o'clock, is our planting intentions report as well as our grain stocks report. So just to review things, the average trade estimate, 94.3 to 94.4 million acres of corn to be planted. That compares to last spring of about 98 and some change, okay? The market is expecting to see 4 million acres less corn, and those acres added to soybeans. Largely, that's what the market is looking for right now. I predict if that doesn't happen, if we're not seeing this backing off, so to speak, in our corn acres, the corn market, I believe, is going to be somewhat disappointed. The market as it is right now, I believe, is trading these numbers. I believe the market is trading about a 94 and some change, 94.4, 94.6. The range is 92.6 to 96, so a pretty healthy range. Soybeans 85.5. Again, that report comes out at 11. With any luck, we're not going to see any big surprises, and by 10 minutes after 11, it'll all be over. The other component today is our stocks report. I like to refer to the stocks report is a gauge of the disappearance of grains. How much are we actually exporting? How much are we actually consuming here locally? I believe also that perhaps our feed number has been somewhat inflated for this particular crop year. It's difficult to generate much of an argument against that. So we'll see. We'll see again in about another 50 minutes or so, straight up 11 o'clock, what we do have for stocks. The stocks number, and again, mind you, the stocks number is a number as of March 1. So again, it'll be the reporting season closes out the 1st of September, and the reality is it'll be the end of September or so before we actually get into our new crop season. So that's about it for today's reports. What's coming up on the bubble is tomorrow, the fats and oils report. That's when I get to compare NOPA, National Oilseed Processors Association, to WASDE, and determine is there an explanation for the difference. Right now, they're running about a 3% difference in reported domestic disappearance of soybeans. I like to track that, follow along with the two groups. Eventually, those numbers do come together and reconcile. Right now, they're tracking about 3% difference. The other one's grain crushings, which is corn for ethanol and corn for sweeteners purposes. Those numbers aren't particularly easy to reconcile because there's a lot more moving parts in the corn market. And then lastly, on the 9th, we have our first, we have a crop production report. Again, I'm not looking for a lot of changes. The acreage numbers that we've been burdened with are ours to live with. The yields, we're pretty well tracking, setting our own trend line yields this year again. Not looking for a lot of surprises there, but that'll be a discussion for next week. But again, crop production report on the 9th. That's about it, everybody, for this week of the Nexus Grain Market Updates. I do encourage all of you to check out our app. If you've not done so yet, we have some people that are with us, professionals that are trained in assisting you in navigating through the app. It's a wonderful tool. We also want to show you our universal grains line. You will talk to an experienced professional grain merchant here at Nexus when you call us up. So we really look forward to hearing from you. Again, my name is Mark. We have a very talented team that works with the company, and we all look forward to your call. So with that, I'm going to sign off, and you have a great day. Goodbye now.